Alright, so for this video, it's going to be like a DLC for last week's video that I made for the stocks. Right, so for this video, I would like to add in a few more stocks and also the US 10-year Treasury yields, the DXY, and the bond markets. It's going to be a long-term chart, and I'm going to name this video the General Market Insights for Q3 of 2024. Okay, so let's get started. Starting off with the US government bond yield, the interest rates. Right, over here, this is the yearly chart. For all these years on the downtrend, we don't have any candles closing above down close candles, right? As you can see right here, ever since the start of this shift in price delivery, look at all the green candles. They were unable to overlap any down close candles until right here. This is the first one, and it's the first time from this 1984 till now. On the yearly close, we have finally closed above down close candles, and it also happened after we took out sell side. Okay, so right here, what do we have? We have these two down close candles as your bullish order block, and you have this fair value gap, this bullish fair value gap. What I'm anticipating on a longer term basis is that we are going to reach into this fair value gap, and then we're going to expand higher. Minimum what I see is this highs. They are relatively equal to this high right here. Okay, so what does that mean if we are going to have higher interest rates? It also means that the market is probably not going to like it, and USD denominated assets are most likely going to drop, and it's going to be quite a very sharp drop. Okay, so this candle here is 2022's candle. If you have remembered what happened in 2022, we have quite a large correction for the markets. So just imagine if we trade higher here from this level to this level here. This is going to be I wouldn't say it's like a recession thing, but maybe just a crash. Okay. I have no idea here. How would you anticipate what kind of environment that would be? But it's not good for the markets. Okay, moving lower, going to the next one. We have the bond market. So the bond markets usually move together with the treasury yields. As you can see, it's inverse. So right here we have took out this swing high. We have closed below the order block that has formed this swing high. So I've annotated down the order block here, and then we have a fair value gap here as well. This is a bearish fair value gap, by the way. Notice how we have never been able to close below any green candles on the way up, similar to how the yields are performing inversely. Right, so I'm anticipating on a longer term basis, we are going to trade into this fair value gap, and then we're going to drop. So how far, or what is the targets here? This would be the low hanging fruit, this low and this low, and obviously all these lows are liquidity. So it can make all-time lows if it wants to, but this would be your low hanging fruit. So that is for bonds. on a longer term basis. Okay, next up we have DXY. So for DXY we have been bearish if you look at it on a macro, on a huge time frame perspective, on a longer term time frame perspective. But ever since the year 2014, we have been closing above down close candles, right? So right here what I see is we have taken out sell side, we have shifted bullish, we are closing above this two down close candles that took out these lows here. And if you put a fib across, look at the reaction off of this order block, and 50% between 0 and 0.25 levels, they are respecting that, right? When you get this, when you see that price is respecting this level here, it is telling you that it is really strong in terms of the direction that is wanting to expand, because it is not even willing to tap 0.25. Usually it comes into 0.25. Okay, and then we have closed above this down close candle as well, that has traded into a discount fair value gap and into this two down close candles. So this to me is a proportion order block. And you look at how we have respected the 25% level last year. However, I am thinking that we might want to reach into this fair value gap once more before we fully take out these highs with speed. Right, look at these highs, they are relatively equal. This swing higher did not trade into the rejection block as well, so I wouldn't consider this as a stop hunt, right? And above these highs we have this old inefficiency, a small little tiny inefficiency here. Okay, and obviously the last up close candle. So I believe that would be the direction for the next few years ahead, right? So this is DXY. Notice how last year we have this small range candles, right? So what do you expect after small range candles? You're going to anticipate the next two candles to give you the expansion candles, okay? Which means we are going to have large range candles expanding towards the upside if price is indeed still in a buy program. Okay, so that's one thing to take note as well. That is for the XY, right? Moving on to stocks. I've added a few. Let's see. Okay, we start off with this Lululemon. Okay, let's go on to the monthly chart, right, for stocks. We have closed below these three up close candles after taking out this swing high, and right now we have yet to close below the breaker. So these three down close candles is your breaker. So depending on the performance of this month, if we get a closing price below this swing low, 1, 2, 3 would be validated as breakers. These three candles, these three down close candles will be your breaker. Okay, longer term targets I have down here, these two relative equal lows and liquidity void. The lower targets would be this relative equal lows. If you take a look, this looks like a market maker sell model on a higher time frame. Okay, which means they are going to take out the original consolidation that has formed these two highs, right? Moving on, we have Disney, right? So for Disney, Let's take a look at the 3 months chart here. Notice how we have taken out this swing high with this 1, 2, 3, 4 up close candles. I marked out the range and look at what it did here. It traded up all the way into 25%, taking out this swing high. And we have 3 relative equal lows, and then we have a inefficiency down here below these 3 lows. And on a longer term basis, we have relative equal lows down here and the original consolidation that led to this highs. On the monthly chart, if we can close below this candle's low for this month, we are going to accelerate lower in the next few months. What does that mean if Disney is going to accelerate lower? Where are the revenues from Disney coming from? Right, all these things you can map it out yourself, and you can anticipate what kind of environment we would be in if Disney is to drop. Okay, I mean, you look at the price and determine the fundamentals, not the other way around. Okay. Right, just to poke, just to give a few jabs of fundamentalist. Right, for Qualcomm, taken out these highs. Right, let's see if it wants to close below this up close candle. If we do, this would be a valid bearish order block, and then we're going to move into this lows here, basically the low that made the high. Okay, and then on a longer term basis, we have this whole consolidation here. This is your accumulation. This trend line here, they are all liquidity below here. Okay, so this is for Qualcomm. Next up, and the other thing is that, do you see the triple top? 1, 2, 3, 3 drives higher. Yeah, that is also another factor that is in confluence with lower prices, with my bias and analysis of lower prices if we get a closing price below this bearish order block, this up close candle. Okay, I wouldn't call it bearish order block yet, but this down close candle. Okay, next up we have Lockheed Martin. This is more of a controversial stock, right? You know, if you know, you know. Nothing good ever comes from this stock going higher. Okay, so right now we are in a buy program for this stock here, but notice how it has been going higher and higher and higher. It seldom takes out the sell stops. Okay, the last time it ever did, I mean, if you want to take a look at it on the monthly time frame, is right here. But if you take a look at the higher time frame, 3 months, the last time it took out some sell stops was right here. This is your rejection block. Okay, it was right down here before this move higher. So as long as we are closing above down close candles and we are not closing below up close candles, this thing is going to continue to run. Okay, and it also means more troubling times. Okay, let's see if we have anything else. Nope, so that was the last one. Right, so with this I will end this session here. This is just like a supplement to what I have recorded previously, last week to be specific. Okay, and let's look at what happened, or what would happen in the next few months to see if the analysis is correct. So let me just run through a few, like for example Visa. Visa, I ran through it already. Let's take a look at AMD. I think it's quite interesting here. Right, so remember that I mentioned that 0, 0.25 and 0.5 are good accumulation prices. So you can see how it tapped this 25 and then rejected off last week. So to me, as long as we don't trade below 50%, we're good. You don't really want to see it tap 50% if you're really bullish on this stock here. So if in an event it taps 50%, you want to see aggressive price movements away from this level here. That is the reaction that you want to see, something like this. Okay, if we start to grind lower and lower and lower, that would make this setup low probability. I'm just putting this out because this was the one that happened the most recently, the one that have reacted to the levels that I've mentioned. Right, so that was one of them. The other one is Netflix. Right, so this is one example that you want to see if we ever tap into the 50% level. You want to see a strong rejection away from it. Okay, let me see if there is the other one. What was the other one? I think it was wait, let me just double check. Maybe I remembered it wrongly. Right, so Coinbase is another one. This down close candle, look at the 25% level here. Right, these are the reactions that you want to see. Okay, what else? Yeah, that's basically it. Right, and I hope you enjoyed this session here. Not financial advice. Please do it at your own risk. Okay, I'm over here just analyzing the charts, and I'm giving you levels that I think it's good. Right, but anything can happen, anything will happen, so you better make sure that your risk is dialed back, because right now we are in a very volatile time. You might not get your, what do you say, you might not get to exit before your strong invalidation hits. All right, so be careful. And with this, I will end this video here. If you enjoyed it, do leave a like, and if you have any questions or if you are interested in any stock tickers, you can let me know in the comments section down below. Right, I will consider doing them when the next one arrives. Usually I do one of these things once per 3 months, but if they are reacting to levels, or if they are reaching into levels or reaching into objectives, I'll definitely cover them for the ones that I've covered. Okay, so with this, thanks for watching and have a great weekend.